Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. We're going to be talking about real money, gold and silver that have stood the test of time, continue to hold value. And by the way, they're in an incredible bull rally right now. In fact, I saw, Jerry, that you were posting on our X that Bix Weir was mentioning after $35 an ounce in silver, there's very little resistance to $50. So let's get right into what's going on in the markets. We've got a new silver squeeze. We've got China putting gold and silver into insurance funds. That's going to be huge. We've got LBMA is running out of product. We're going to get into that. And, of course, much, much more here on The Real Money Show. My name is Jeremy Wiseman. Joining me is Jerry Correia. And if you would like to hold physical gold and silver in a registered account, fully allocated and segregated, give us a call, 1-877-8-SILVER. The website, guildhallwealth.com, and we'll show you how to have your own unencumbered physical gold and silver in your registered account. Now, Jerry, as well as IRAs, we can do IRAs for U.S. clients as well. Jerry, last week we were telling the story, before we get into all of this, about the PSLV and that there was an entity shorting the market. I think we were ahead of the curve, by the way, talking about that, saying it's pretty clear that this is not an attempt to push the market down. It's not about trying to get some sort of downdraft in the gold and silver market, but more trying to stop an entity from buying physical product, which would drive the price higher. Now, of course, this week, the price of silver is up almost $2, I believe. Gold is at, again, all-time highs. Get used to hearing that. And we want to find out where gold and silver are headed next. But clearly, they're not doing a good job of preventing the market from rising. They may be preventing the market from acquiring new product. But then this week, we had Jesse Colombo come along and say, guess what? We're going to have a buying spree. Mm-hmm. Tell us a little bit about this developing story.
Yeah, you know, it's we've been following Jesse for a while. Shout out to Jesse of the Bubble Report. You guys want to follow him. He's a writer of that newsletter. He's a precious metals analyst. He's been around for a very long time. And back in 2008, he was recognized by the London Times for predicting the global financial crisis. So when he speaks, you want to listen. You want to follow his writings. And just a few days ago on his report, he wrote the article that is now going viral, which we will be posting on our X and in our newsletters, so make sure you get that in our investor kits. The Mechanics of Silver Price Suppression by him, which followed up this amazing call. He's rallying the troops. He's rallying the dealers, us included. March 31st, the Monday coming up, folks, is Buy Silver Day. It's called Let's Break the Bank's Hold on Silver. It's a very important day. And it's falling in line with April 2nd. I think that's a date that was called Liberation Day.
How does this, we'll get into Liberation Day, how does this differ from the silver squeeze in 2021?
This is well, back in 2020 and 2021, the silver squeeze was championed by the Reddit group. But this time around, you're going to get much more participation this time from us leaders in the community. The Reddit group, they chose to focus on things like the movie theaters and
oh, you mean the AMC and the GameStop? Yeah,
right.
Yeah.
You know, going after the banks that are shorting these companies unfairly. But you know, the truth is, silver, in fact, is the most shorted commodity on earth.
Okay, but I remember at the time there was a guy, the Hawaiian something, and I remember reading a lot of his posts. He was pretty in that that movement at the time, and everyone was all about the Sprott PSLV because they knew that it was acquiring physical product. And again, even if the client doesn't own it, the custodian does. And we know that Rick Rule, there's that video in Arcadia Economics. He got interviewed that they were clearing out exchanges. But that's different this time because you can't buy the PSLV because it's being shorted. So it's not going to affect the price. There's not going to be the silver squeeze on the retail side. Silver squeeze 2021 didn't really make the impact that the actual ETFs did, because they were acquiring the 1,000-ounce bars and putting the pressure on the market. So unless people are going to go in and make sure that those products that investment can't be leased, how is it supposed to impact?
Deliveries, right? You're going to see the deliveries that are happening right now. The bullion banks right now notoriously have been JP Morgan, UBS, that suppresses silver prices through aggressive naked shorting. But right now, a coordinated surge of physical buying of silver is going to catch them off guard and break their hold on the market. I'm going to get into his Jesse's article, which is called "The Mechanics of Silver Price Suppression," in a little bit. But we have to understand that we're not talking about buying the proxy. We're not talking about the SLV here. You want to make sure that you're buying the physical silver, and you want to get that through guildhallpreciousmetals.com or guildhallwealth.com. Give us a call at 1-877-8-SILVER.
And buy from a Canadian company.
Why don't you?
Why don't you?
Where's the Team Canada effort?
We're a Canadian company. Why not buy from a Canadian company? 1-877-8-SILVER, the website guildhallwealth.com, or our e-store guildhallpreciousmetals.com, and you can get fine Canadian product, or you can get fine Swiss product. Anything that's LBMA is a good thing. Now, we don't like the LBMA these days. We've got a story about the LBMA, but they are the governing body that dictates if these refiners and mints are sourcing the product ethically, refining to the proper purity, fashioning to the proper weight, and can handle global business. So, the 66 gold refiners and the 100+ silver refiners and mints, they shouldn't be punished just because they're on the good delivery bar list. What it means is that these are the products that are going to be the most liquid down the road, that you're going to have the easiest time selling down the road, and it's the type of product that we only sell here at Guildhall Wealth.
Exactly. Well said, Jeremy. But I want to get into this really quickly. For many people who don't understand the mechanics of the silver price suppression, even dealers, many precious metals investors suspect that the silver price is manipulated, but they can't explain it. So Jesse explains it very well. He clarifies how silver's price is artificially suppressed, primarily by bullion banks like JP Morgan, UBS, HSBC, Goldman Sachs, major players in the London Bullion Market Association. There they are, the players. These banks, acting as market makers, are participating in price-setting mechanisms like the London Gold and Silver Fix, hold significant influence over the silver prices. And we could see this most evidently in the mornings. The tactic is the price slams during the New York Open, the COMEX session, which is from 8:30 in the morning to 11 a.m., where banks aggressively lower the silver prices to prevent breakouts above key technical levels. It's obviously there to discourage people. They wake up in the morning, they see the prices, it's down. You're discouraged. Stifles the momentum, and it keeps silver undervalued. We haven't. This is nothing new, Jeremy. This is going back to, 1965. They wanted to discourage people from buying back then when Lyndon B. Johnson passed the Coin Act, the coin. Sorry,
it's like the Coinage Act. He had to take it out because they said, there's not enough silver. We've got to take it out of circulation.
Demonetizing silver from the U.S. currency, remove silver content from all coins going forward because the U.S. Department of Defense signaled that they were short on their silver supplies.
Okay, that being said, though, Jerry, we're in the middle of a run. Like, they're not doing a very good job of manipulating.
Exactly.
What's changed?
Exactly. So the 8:30 to 11 o'clock in the morning price slam did not happen today. Silver is up about $1, which represents about $3 so far, and it's been happening almost daily. It's up 3% so far in the day. This is a massive run. This is despite what they're trying to do. The physical bullion is being taken out, and it's all anticipation of some tariffs that could be launched on April the 2nd as well.
Anything else from Jesse?
No, great job, Jesse. Keep up the great work. But you know what? Going back to this Liberation Day,
yes,
this is April 2nd coming up. So next week, where there's going to be massive reciprocal tariffs happening, potentially impacting the market, specifically copper. We're seeing copper hitting all-time highs, so we have to keep an eye on Dr. Copper. What it's signaling? What does that mean? But this Liberation Day thing, we heard it back in October 11, 2024, when Trump used that term to signal, America's sovereignty, and he was uncovering the occupation of America. So we're seeing a lot of tariff saber rattling, but it's really uncovering a lot of the corruption that has been going on, and it's actually strengthening a few industries. But as we know, gold and silver they're exempt from tariffs. You can't tariff money, but if you tariff copper on April 2nd, because silver is a byproduct of the copper mines, silver will have a skyrocketing effect and potentially liberating us from these corrupt bullion banks that have so often, got away with just fines and slaps on the wrist for their silver price manipulations. That's going to end.
Do you think that could be part of the reason you're seeing a massive move up right now in silver? Because this is a big move that we've been seeing the last couple weeks.
It's everything.
It's everything.
It's like, I call it the 10-piston vehicle. This is like 10 pistons going, a V10 engine just, ravaging these bullion banks. Every dollar move higher is about $120 million lost for these banks that are short silver. So, and they know a lot about the unrealized losses, and we're seeing this around the markets right now. The S&P doesn't look too good right now, and it's the time for gold price revisions, and that's going to be higher and higher.
Thank you, Jerry, because you just took the words right out of my mouth. In the next segment, let's talk about the fact that a lot of revisions are going on for where they see the prices of gold and silver headed for the rest of the year, since we've already taken out a lot of the projections. The number 18778 silver, the website guildhallwealth.com. Learn how to hold physical gold and silver in your registered account. Buy it direct, store it in a depository where it's fully allocated, segregated. You get your serial numbers. You can go and visit your product. You can take delivery anytime, but it's fully secured, ease of liquidity. Storing your product at a certain point just becomes necessary. Give us a call. The number 18778 silver and the website guildhallwealth.com. So glad you could join us and learn about what's happening in the gold and silver markets. One thing, Jerry, that before we jump into what's happening in the LBMA, the physical supplies, projections on the market, is I remember for a long time, Egon von Greyerz used to talk about, at certain points in time in podcasts and whatnot, about the fact that watch what gold is doing at the peripheries in currencies, meaning you could have a situation where gold was reaching new highs, but it wasn't happening to the US dollar just yet. But that was a major, major indicator. And if you look at what silver's doing in a variety of currencies right now, they're the periphery currencies. Silver is already at all-time highs in Canadian dollars.
Very true.
It's at all-time highs in a variety of currencies, and that's going to circulate into the middle, wind into the middle of the U.S. dollar. And also, I'm not sure if it was Jesse Colombo this week. No, it wasn't, but someone put out a chart, and it was just interesting to note, and I know this is basically your cup and handle, that when you look at the peak in 1980 where silver goes to, you get the spike up to $50, and you look at where it is today where it's trading at $34, but there's support there. It's not a spike. It's not a missile. It's a climb up a mountain, and there's no you know what I'm saying?
Yeah.
So it's a solid foundation in which to move to higher and higher levels.
Right.
And then you kind of just sit back and you think about these charts where you pull out and you think,
you see,
what would a spike look like,
a
right?
hockey stick.
So it's very exciting,
especially
for the market.
Especially with referring to the technical analysis and watching these charts and watching these levels, the pattern that silver is acting on right now. It's a very clear channel. It has a 5-step channel, and the longer this thing has consolidated. Look, we've been around this 88 to 91 silver to gold ratio for a very long time, which is signaling no, we haven't really broken out yet. We see a breakout when silver goes below the 70 to 1 silver to gold ratio. That's when you get excited.
A real breakout.
We are excited now, aren't we? I mean, we're seeing all-time highs. We enjoy the fact that banks have to keep revising their higher revisions, like Goldman Sachs recently.
Yeah, let's talk about that. So gold gets to $3,000. All of a sudden, you're going to have to revise your outlook because a lot of banks were calling for 3,000. We already broke it. And I'm not sure if it was the World Gold Council, but I was listening to, I think it was a Vince Lancy report, just demonstrating that the recent $1,000 move up in gold happened within just over 200 days, whereas the $1,000 move up from 1,000 to 2,000 took something like 1,100 days. Mm-hmm. And so you start to see velocity, and you also start to get the benefits of the compounding, right? It's easier for it to move up $1,000 at a time now. It's moving up as a less percentage. Talk to us about some of the new outlooks. What are the banks seeing? Where does it go from here for the rest of 2023? And are they going to have to re-revise? Are their numbers again too low is my question.
That's so exciting, Jeremy. You piqued, I think, everybody's ears, everyone's interest when you said exponential, because we need exponential growth. They're stealing from us. The inflation, the money printing, and the devaluation of our currencies. Everyone's chasing yield risky. Look at the markets. Do you want to put your money into a risky stock market right now?
Oh, and
no, you don't.
And I had a conversation with a client yesterday who was making a first purchase, very concerned about walking around with the gold and that it could be stolen. And I had to chuckle because I said to him, I said, the government steals 45% of your income through income tax, 13% on everything you buy after that. And then they steal through inflation. They say it's at 2% when it's more like 10%. They're into you for 70%. And you're worried about someone actually stealing something from you. They've got it so down in terms of their wealth stealing scheme.
No, they woke it up. They woke up though. They're really angry about the tariffs now. So they're really angry about that. They weren't angry about the theft that was going on for decades,
right?
Stealing your wealth through the stealth inflation. It's not stealth anymore. The goods are like shrunken in half. You're not getting any bang for your buck. So exponential growth.
But you
is
know
what
what?
we're going to see.
But that's the thing, right? When I got into this business, it was what we were told is, look, it's not for everybody.
Exactly.
And that's
free.
really true. I mean, look, not 10% of the people make 90% of the money. It's not for everybody.
Yeah.
You got to get in. Although, again, I had another funny chat this morning. Someone said, if I might not get the funds till next month. Will that be too late? And I'm thinking, like, I'm going to have to retire in a month? No. You're as you said, this thing doesn't even get started till we're down to a 70 to 1 ratio on silver to gold. This thing is not even, gold's going to 7,000 plus, but it's just exciting to see this momentum. And of course, naturally we think, oh, did I miss it? Right?
No. But you still want to, like, come Monday, that's called Buy Silver Day. It's a coordinated worldwide effort now from, Eric Jung in China, from all across the globe.
Great follow.
Everybody is getting involved. We're talking about participation to put the pressure on the LBMA. We want to see this. We want to see those proxy pushers and paper pushers creating artificial supply with, here's a piece of paper. This represents 5,000 ounces of silver and 100 ounces of gold, a piece of paper that you just printed out of thin air. You created supply, and then they're selling it back to the market. It's criminal. Okay,
so you just mentioned Eric Jung. He was on one of our favorite analysts, Rafi Farber, this week, and they were talking about the LBMA, and Eric was giving the numbers, okay? Listen to this. The LBMA, the silver stash, the available silver that they have 5,500 tons left in their vaults, okay? The U.S. is importing 1,000 tons per month from the LBMA. Total, 2,000 tons total from everywhere, okay? So the U.S. has taken up half. So here's what he says. The big players want real silver. They don't want paper. They're flipping old bank tricks of the shorting in the comics and going long in the LBMA. They're already breaking it. So U.S. banks hoarding 5,000 extra tons. they're not letting it back into the COMEX. They're taking it out, right?
Yes.
So the fact is, here's your takeaway. LBMA could run out of silver in the next 4 to 5 months. Forget Liberation Silver Day, you could do that all day long.
Mm-hmm.
The LBMA could be out of silver and gold, out of silver within the next 4 or 5 months. You realize that if supplies run out, you could be looking at $200 an ounce.
Mm-hmm. Yeah, easily triple-digit silver. That's exactly what we're going to see.
So am I too late if I buy it at 40?
I think, you know what? We want you in the market. We want to be able to help you, and we want you to experience this. And this is going to be life-changing for yourselves, for your family, for your portfolio, for your savings, and beating the inflation that is just getting worse and worse as we go.
And how many ounces of silver would we need for a house?
Remember back in 1980 when the prices of silver peaked, all you needed was roughly 2,000 ounces of silver to buy an average home in Toronto, in New York, wherever you want to live. You don't need to move across the world to find value. You don't have to do that. If you can get your hands on 2,000 ounces of silver today, which is around 100 grand, is it around 120,000 Canadian dollars, perhaps?
Yeah. I mean, right now you need 30,000 ounces to buy a $1.5 million property.
Yeah. So this is an opportunity for you. This is an opportunity to break the shackles of debt. If you have mortgages, multiple mortgages, I'm talking to you. And this is going to be something that's going to be one of those epic moves. They have so many reasons for this type of price action. One of them we were talking about with the momentum and the price acceleration coming from the World Gold Council. You hit the nail on the head there. But they summarized it by saying this extraordinary momentum has pushed gold to 3 standard deviations above its 200-day moving average, suggesting a perfect storm for the precious metal space. Standard deviation, all that means, it's just a way to measure how much numbers in a group differ from the average. So what's the spread between where we are today and the average? And we're really high. So the acceleration and the move higher in silver and gold is going to be a hockey stick. How high are we going to go? It's exciting because we know in technical analysis, the longer something consolidates sideways, the higher that hockey stick.
You know what's really interesting about this run? There's been no, how do I say this? There's been no switch, no things that perpetuate it, right? Like for example, when they cut off bank accounts, people ran into the gold and silver market. When the Ukraine incursion occurred, the market went up, right? There's no push specific event
like a black swan
that's pushing the market. The stock market isn't crashing, the dollar isn't crashing, and yet you're seeing these moves up. So it's behind the scenes moves that are driving the market that are almost in preparation for something, right? And is it a takedown of the LBMA? Maybe. Is it a takedown of the COMEX? Maybe. Is it preparation for the Basel III rules? Perhaps. Is it just demand from certain? Is it tariffs? Is that what the spark is? I mean, we've kind of already
pretty
demystified that one, right? We've already done the debunking on that because it's just too much to warrant, and also there's no tariffs on money. So this is a very curious move in the absence of a spark. That was the word I was looking for, by the way.
Yeah, the spark. I think it's multifaceted. I think the new warfare is behind the scenes. It's through this coordinated effort to break and disincentivize the paper market. Look, if you're making when Basel III rules come in, and now you have to outlay more to get the piece of paper contract, why not just buy the real thing at 100%? So it's disincentivizing the paper, the corruption that's been going on. And who knows what that corruption, kind of corruption, when you're dealing with gold is tier 1 capital that you can use to get financing anywhere. What has this leased gold been financing around the world? Wars? Juntas and coups? We don't know. But if you stifle and you start breaking that bank account that has been used to finance things, I think it's an end to corruption. And, that's why the Rothschilds said it best. Give me the power to create the nation's money, and I don't care who makes the laws. The lawlessness, I think at this point in time, we're going to see that potentially stopped or stifled. We'll see how this happens. But they're going after the money, and gold and silver are your real money.
I'll repeat, because you mentioned it. I'll repeat that it's honest money, so it's disliked by honest people. That's what Ron Paul says, right? So we got a lot more coming up. We've got to keep going with this market, because I don't even know if we've gotten to the cherry on top about what's going to happen next in the market and why people should be involved, but they should definitely consider hedging their portfolio with some real money and having a physical asset, something that you could go to the vault and personally hold in your hand. You can't do that with an ETF. You can't do that with a certificate or a pool account. I'm sorry. And you still pay storage for all of that stuff. So you might as well just go out and buy the real thing and hold it in a registered account, or just go out and buy it for the first time and see what it's like to have real money in your hand. The number, 1-877-8-SILVER. The website, guildhallwealth.com. If you haven't been watching, we've had a spectacular year thus far in both gold and silver. Gold continuing to reach all-time highs. Silver already reaching all-time highs in many currencies. We are, $15+ away from reaching the all-time high in silver in U.S. dollars. But there has been a good amount of interest in the market, Jerry. I'm seeing a lot of people seeing the gains in the market and excited. The question you often hear is, am I too late watching the price rise? So let's talk about the revisions, right? We've got Barron's came out. You have Goldman Sachs coming out. I think the World Gold Council as well. You've got entities having to revise where they see gold going. Let's talk about some of these revisions and what that could mean for silver as well.
Yeah, so it's just more and more gold all-time highs, which only means more banks revise. We had the Goldman Sachs boost their gold target to 3,300 by the end of this year, up again from their previous target of 3,100 announced last month. So this was just a revision that they did last month. So a new fresh revision. They're just going to have to, like I said, just revise to 10, 15,000 and just call it a day. Just stop revising. Just do it to 15,000.
Well, 3,300 on gold. If you were to get down to like an 85-to-1 ratio, silver to gold, you're at just shy of $39 an ounce.
Right.
So this was like a $5 move from here.
It's exciting stuff.
Yeah.
Now, the bullish outlook is driven by stronger than expected central bank purchases, particularly from emerging markets, which analysts now estimate will average 70 tons monthly, up from 50 tons. Goldman Sachs also says that solid inflows into the country, and even looking, investors in retail, they're seeking hedges from economic uncertainty. Barron's gold could reach 4,000 as investors flee risk. Multiple market strategists from Bloomberg's Mike McGlone and Yardney Research and Jeffrey Gundlach forecast gold could hit 4,000 and investors flee riskier assets amid market certainty. There is a move towards resources and away from financials. The shift is also already underway, with the S&P dropping 8.1% and Bitcoin falling nearly 13% since February, while gold has gained 3% during the same period. Gold has surged nearly 40% over the past year, reaching record highs before settling where we are today at around 3,060 as we record. So we're watching these trends. After 3060, we're watching 3091. After 3091, it goes right up. The Fibonacci's right up to 3,200. So the acceleration breaks, the momentum breaks higher. Jeffrey was right. Jeffrey Gundlach was right. We're going to be seeing 4,000 this year. He said gold has blasted off once again with a wave of violent breakouts in the market. So you're going to see more and more revisions, which will only mean silver gets pulled along with it.
And why wouldn't you want that in a retirement portfolio? Right? Why wouldn't you want those type of gains, knowing that gold isn't just a hedge and silver isn't just a hedge, but they're going to be part of the solution? I mean, no one's gonna write it out for you, right? Just like no one's gonna open a newspaper and read their horoscope and say today's the day,
Right.
just so you know, today's the day you're gonna meet her. You know,
Right.
It's not gonna happen. But you can read the tea leaves. You can see that the U.S. is bringing in that gold. They're bringing in that silver. Whether it's going to go straight to the Treasury, whether it's going to go so that the Treasury can actually mint enough coins for the demand. We've mentioned it before. I think it bears repeating. The mint on many occasions over the years has simply stopped providing coins to the public so that they wouldn't break their own records. So it's kind of like polls. You know,
Very
can
much.
you trust them 100%, right? It's a way to fudge the numbers. It's a way to say, look, there's no demand. Well, there's no demand if you don't have the product. So are they bringing in the product for that? Is it that they're bringing it in for all sorts of new things,
Advancements.
like advancements, solar power, energy, batteries, all sorts of things that could be created. Maybe they want it here because they're opening car manufacturing in the United States. You know, hopefully we'll figure that out with the tariffs in Canada. You know, look, we have an election right now. Let's give it a month, right? It's not
We'll see
even
where we are in a month.
we're not even a month away, right? Before this thing has some sort of resolution where we can see where we're at and move and how to move forward. Jerry, $4,000 silver is very exciting because even if you get to an 80-to-1 ratio, that puts silver north of 50. There's no way silver goes to $50 without that ratio falling. And I know that in 2011, that ratio fell to 35-to-1. Historically, it's 16-to-1. It's coming out of the ground at 8-to-1. There is so much room to grow in silver. You can't not be excited.
Exactly, especially knowing that, I mean, we have all these pistons moving at the same time in support of higher prices. We don't have too much on the other side that could suggest that prices can start falling now. One caveat could potentially be if there is a massive sell-off in the stock market. Traders tend to have to sell the liquidity of gold and silver to pay off some of their margin calls. So you got to take advantage of these potential short-term dips in the market. But then we are in the channel. The support is right there. The 50-year chart is a very strong chart. If you look at that, you'll see very clearly that we are currently in the setup of a major spike, being in the third cycle, super cycle of gold. We're at the tail end of that because it's a 10-year cycle which began back in 2016 when gold hit a low of $1,050. And if it's a 10-year cycle, somewhere around 2026, it should do what gold did in the previous two cycles, which is about 1,400%.
And what's interesting is, as I said earlier, 10% of the people make 90% of the money. But David Morgan, who's an analyst in the silver market, has often said that 90% of the move happens in the last 10% of the bull market. So it is a good setup. It's a very good setup. And if you're concerned about that, by the way, I know oftentimes people who are looking to acquire physical precious metals for the first time, there's always this all-in mentality. You don't have to have an all-in mentality. You could say, look, I want to put in, let's just give an example, 100 grand. Okay, start with 50. If you get the pullback you're looking for, winner, winner, right? You get to feel smart. Good thing I held back. Good thing I had some dry powder.
Yeah, exactly.
And if the market goes up, guess what? I feel good. I feel good. I got in. I didn't wait for the magic moment. Right? It's like that scene in Top Gun. It's like, take the shot. Yeah. Right?
It's a good one,
It's
yeah.
it's not going to get any better.
No.
So, you've got to make that first step. And of course, we're speaking from long term. We've been in this market. I purchased my first ounce of gold in 2007. I think it was like 480, 580, something like that. Who knows? I can't remember. It's done great. Right? Wish the pension funds would do that. Wouldn't you like to know that your pension fund had gold in it and that they bought it at $300 or $400 or $1,000 an ounce? Mm-hmm. Wouldn't that be comforting to know that? Well, guess what? Insurance companies in China are doing it. We'll get into that in the next segment. The number, 1-877-8-SILVER. The website, guildhallwealth.com. Contact us to learn more about holding your own gold and silver in a registered account, fully allocated, segregated, get the serial numbers. You can do it in a regular depository account so you know that your product is safe, secure, and you have ease of liquidity. You could be traveling around the world. You could be at the kids' baseball game, and you know that if the time's right, you pick up the phone, you can sell. We offer that at Guildhall. So give us a call again, 1-877-8-SILVER. The website, guildhallwealth.com. Jerry, we brought this up on the radio show before. I just thought, it might be a good time to bring it up again. China has launched a pilot program back in February, allowing 10 of the biggest insurance companies to invest up to 1% of their assets in gold.
Wow.
This is a crazy event in the market. China's pushing gold to diversify from shaky markets like property, U.S. dollar risks, and insurers see it as a safe bet against, economic turmoil, right? Now, the Shanghai Exchange, the insurers are buying it direct from there, from the SGE. Spot contracts, swaps, it's boosting China's grip on the gold game. It's when you think about this, when you just think about the fact that they might put 1% into it, but it's a pilot program. It could increase to 10. They're just starting it at 1%.
Wow.
If they were to go up, they could be sucking 3,000 tons out of the market on an annual basis, pushing, maybe even up to 4,500 tons of gold going into insurance companies. Like, you're opening a massive market. This is the type of stuff, Jerry, we have discussed on our show. If only a pension fund could start buying physical gold, and how successful would they have been if they did so?
I know.
Right? So this could be massive for the gold market because the demand on the physical. And it also answers the question, by the way, what if central banks decide that they don't want to buy anymore? They've been buying very consistently as the market's been rising. Fantastic. Wouldn't you like to have that? Wouldn't you like to be buying while the market continues higher and higher and higher? There's no reason to stop buying if you think it's going to keep going higher and higher and higher. Well, what if you decide, okay, I'm tapped out? Oh, well, okay. Well, thank goodness insurance companies are buying it now.
Exactly.
Right? So, the retail market seems to be almost squeezed out of the bigger picture of the demand on the physical market. And what a beautiful thing. We're seeing gold being remonetized around the world. Exactly. And silver being remonetized. It just feels like the wind's at our backs.
For sure. This is a truth to the saying is he who has the gold makes the rules. The game has changed, but the rules remain the same. If you have the gold, you make the rules. You're going to see this change happening around the world with participation. And what excites me about this move is what you mentioned. It's not just one player supporting, like we see Michael Saylor supporting the market, and everyone's a fan of Michael Saylor, so they're going to buy too. No, we're talking about 1% of big money in China. It's almost, I don't know if it would be equivalent of 1% of the Chinese population, the poor and the big money, but this is 1% of big money, insurance company money going into a pilot project, 1% of their funds. That is massive. And I know how big this is because at the beginning of my career here at Guildhall 12 years ago, my job was to pound the phones. We didn't have really of a case back then. The case was just protect your wealth from inflation. Nothing much with the central bank buying. Nothing really about.
I feel bad. I feel like we didn't train you well. There was a lot more.
Yeah, the fundamentals and the currency devaluation. Those were the legacy fundamentals. The fundamentals now are more dynamic. They're more growth. They're more acceleration, exponential growth, and that's what makes this whole thing really exciting. I used to cold call. I went to the pension funds. I called them. And I asked for the opportunity to present. They wanted nothing of it. They said their clients are not interested in gold and silver. You're probably hearing that right now from your planners or your money managers, that you can get gold, no problem. You can get this paper proxy, your ETF. You'll have exposure, no problem. You don't want exposure. These insurance companies are not getting exposure. They're getting the ownership direct from the Shanghai Gold Exchange, as opposed to the London market that has no gold and has no silver enough to cover their 100 paper ounces for one.
They're literally going. There's articles out there talking about the fact that it's other central banks that are supplying the physical gold to the U.S. Because if you took a loan from the Bank of International Settlements,
yep.
You had to put gold on on hold at the London vaults. So they're just taking that product with your permission, but they're taking that product to fulfill orders. And you know that they don't have any product because it's cost plus, or sorry, it's like what is it, T2 plus 90 days. Like if you can't deliver in 2 days, guess what? You don't have the product.
Right. Exactly. So this is the new dynamic where we're seeing in this market is taking delivery, reshuffling, and it's a new transition to a better, more healthy monetary system. So we're seeing a remonetization of gold and silver. Why is gold heading into the U.S. Treasury? That should be a major question. You know, it's not really going to the U.S. mints for us, the retail. You know, kind of going against the seasonal averages.
What was that thing
of our demand?
What was that thing where Trump was showing a journalist around the Oval Office and saying it's gold, it's painted, but it's not real gold? What was that? You told me about that?
No, that wasn't me.
Oh, okay.
I usually, if it has to do with the Oval Office, it has to do with Andrew Jackson being on the wall, the one who killed the central banks.
That's right. That's right.
And it's on the Oval Office right now. So it's a remonetization to potential audit, to revaluation, to exponential growth. This is the rare acronym that we're going to be seeing in the marketplace, and it's going to affect positively your portfolio. You're going to see the top side potential that you're looking for, and you're hedging with a reserve. Your reserve will be decoupled from all of the madness that is happening in the financial system, all of those toxic derivatives. You need to decouple your wealth from these things, diversify accordingly, and position yourself for what's to come. We're seeing an industrial monetary convergence and a hedge from a hedge and as well a growth catalyst in the gold and silver market. So it's a very exciting time. Why wouldn't you want gold and silver in your portfolio? Why don't you participate in the March 31st? Buy silver now and destroy those bullion banks. You got to get at it. You got to give us a call, 1-8778-SILVER, the website guildhallwealth.com or guildhallpreciousmetals.com.
And we'll show you how to hold physical gold, physical silver in a registered account, owned by you. It's unencumbered. You can go to the vault, personally audit your holdings. It's an actual asset in your registered account. To get started, though, you could just start with, as Jerry said, physical product, take delivery, and of course we also have the vault for ease of liquidity, great storage, secure your product, make sure it's fully insured. If you've missed a show, you can follow us on YouTube. You can follow the show on Rumble. We're also on Spotify. You can follow us on X and see what's going on in the market throughout the week. The number 1-8778-SILVER and the website guildhallwealth.com. Thank you so much for joining us this week, and we can't wait to speak to you next week here on The Real Money Show on AM 770 Calgary and AM 640 Toronto.